2024 performance for the stock portfolio. I've done myself a huge injustice. When on the 2nd of January, I eyeballed it and looked at the spreadsheet, I thought we were coming around 30%. It's actually 41.52% on the returns from the January broadcast that I did for my private clients on the Telegram channel, which takes from my approved list and then we filter it more for them. And we went to the end of December. Okay, so January to the end of December, 41.52% is the return. Now, had we done one less month and excluded, so did it in 11 months, it would have been close to 50% because December turned out to be the worst December since, 1950? But you can't cherry pick like that. So what were the good and the bad? What do I think is going to happen? What delivered? What didn't? What surprised me? What are the lessons to be learned? Well, the lesson to be learned is the process and you stick to it, because a lot of the gains came in a few months, as often is the case. MicroStrategy was the winner at 515%. However, even if we didn't have that, because there were 29 individual picks, and we assume everybody puts equal amounts in each, even though I put more, as you will know, in the quality 5, the 2 M's and the 3 A's, Meta, Microsoft, Apple, Amazon, Alphabet, and in leverage, and so get superior returns. We never assume that of others. We just assume they put equal amounts in each. So in actual fact, whilst I would do significantly better, others would do this. So MicroStrategy was the big winner, then NVIDIA, then Ambia, AB. Now, even if you exclude the leverage, it comes to about the same percentage points, which is surprising. But then again, you got 29 securities. So I'm excluding leverage on, say, QQQ, S&P. If you want to include it, it just basically comes to roughly the same figures. You've got 29 individual securities is the reason. Meta and then Goldman Sachs came in 7th with 54%. If you put a gun to my head and said, pick me something else for the year, I'd probably say it, and I still continue holding Goldman Sachs, it would probably be Goldman Sachs. And then Herc Holdings, obviously the quality 5 I already mentioned. Shopify, what was disappointing was the number which hit stop losses. Given there were 29 stocks, 5 hit stop losses, which tells you it's important for us to have our risk management approach that we have and our money management approach that we have, critically important. I think amateurs out there get their fingers burnt because of those things and get far poorer returns. As I said, patience was the key. You really have to wait the whole year to get your returns. Again, the amateurs get that wrong as they chase returns and dopamine hits, whereas we earn a lot by just sitting on our hands. What was disappointing? I guess Levi Strauss, the ones which really hit us, CVS hit the stop, Snap, Moderna hit the stop, but nevertheless, because the winners outweigh the losers, and there was a good spread amongst the winners. It wasn't just 1 or 2 winning stocks. It was actually well spread amongst the 29, of which, by the way, 22 went up, okay? And the ones above the average, so our overall average, 8 were above that average. So a really good spread. Anyway, if you'd like a free pensions review, look at the links in the bio or alpeshpatel.com/links. The past is not a guarantee of the future. In 2022, we got a 0% return because we had to hold cash most of the year, which was a good thing because people like Scottish Mortgage Investment Trust lost 50% of people's money, okay? A lot of the approach that I've mentioned here, I've written about in my books, 18 odd books published by the Financial Times, Macmillan, tourist columns in the Financial Times that I've written. So this isn't new, okay? We're just following the process. It's out of our hands because it's what the market delivers, and clever people in these companies would just ride their coattails. Okay, so it's all been well published. Follow me on LinkedIn as well. But like I said, a free pensions review. Have a look at alpeshpatel.com/links. Thank you.